Hi, and welcome to the Smart Beach Investor Podcast, where we give a update on what is going on with Florida's Emerald Coast real estate. I am John Moran. I'm the CEO and founder of Keller Williams Realty's At the Beach team and Smart Beach Investor. I own property here. I have a rental management company, and we have a real estate sales company. So I'm a little bit dialed into what is going on here. And I love me some Florida real estate, condos, houses, land, 38 to Panama City to Destin to Fort Walton Beach, all of it. What is going on here? Here's one thing. 4th of July came and went. That was good. That was good. If you were here, glad you came. If you weren't, there wasn't as many people this year. All right. We have fewer folks in town this summer than we've had in the past. They're building a bike path between Destin and Okaloosa Island, Fort Walton Beach over there. It's going to be great for people who like to run and bike on Okaloosa Island there. It's going to be awesome. I was looking at Panama City Beach, Laguna Beach area. That is a comer. Laguna Beach, property owner, I love that area. I think it's going to be the next inlet beach, east end of 30A there. I think it's just all going to meld into the west end of Panama City Beach, right through Laguna Beach. And comer, right? You still have some lower end houses, but you have $1 million properties popping up left and right. Pretty exciting. 30A is 30A, rocking as it always is. So let's get into it. What's going on with Destin area condos? Fort Walton Beach, Destin, Miramar Beach. What's going on with the condos? Let's start with number of transactions. Ugh. Let's go back in time though, back to the Great Recession when the market just tanked. You can see the number of transactions here. Banks got tight with loans. It was hard to get money. So we saw the transactions fall off. Prices were in free fall. It's hard to buy when tomorrow the price is going to be cheaper. So a lot of people waited. Transactions in free fall. And we're in the Great Recession. A lot of people were worried about their jobs and the economy in general. So they weren't buying investment condos at the beach. And it sucked. The number of transactions plummeted from 2004 to about 2009. We're kind of seeing the same thing now. Affordability has collapsed. Interest rates is the thing this time. They jumped from 2 something to 8 or 9 something, tripled, okay? And prices doubled over the last couple of years. So we have high prices of real estate and high prices of money. That's causing a lot of people to not want to buy. Then you throw this cost to own hammer, it's causing the transactions to fall off. And we're certainly seeing that. The price of anything really comes down to the cost of money, the cost of the property, and then the supply of properties listed for sale. So let's take a look at condos listed for sale. What's going on? Is the supply going up? Is it going down? What are we doing? This is interesting. Look back at the Great Recession, 2005 to 2011, 12 area. Check this out. I mean, clearly the number of listings fell. Why would they fall back then? It's simply this. Sellers didn't want to compete with the banks and the foreclosures. Prices were dropping. If you're a seller and you didn't have to sell, you didn't list. So we saw the inventory drop like a rock. Makes sense. Makes sense. I don't want to battle a bank that's willing to give it away, just get off their books. How about now? Is affordability collapsing now? Is it? It looks like it came down a little bit. It's not a crash. It's not a crash. And I think what's happened right now is you got these folks, sellers, dialed in, locked in with these low mortgage rates. They're not feeling the same pressure as maybe they did back in the day. So they're not jumping on the market. Matter of fact, they're comfortable just sitting, holding the properties or letting them ride on the market for an extended period of time. Banks, are there going to be foreclosures? Not nearly, not even close. So many people had so much equity in these properties right now that the banks, the need for foreclosure is nowhere near. Don't look for a lot of supply to come for Destin condos. That's going to impact pricing. Take a look. Yeah, here we go. Destin condo pricing. Back in the day, the Great Recession, we saw a fall off in prices, no doubt, an absolute fall off. And the reason why was supply. Again, look at this. The number of condos exploded from 2004 to 2009, 137 new buildings. That's a lot, right? For what, 7,000, more than 7,000 units new to the market that we didn't have before. That's a lot of new properties in a small little period of time. And that puts a lot of pressure on other sellers. And when the market dropped and banks got tight with their dollars and foreclosures and short sales pushed prices down, yeah, sales prices chased after it. So when you got a lot of supply, prices tend to fall. Today, there's not nearly that supply. What we have, how many new condos right now? Five new condos, 120 some new units. So you have these smaller buildings with bigger units coming online, right? These $1 million properties. So we don't have nearly the supply that we had back then. So prices aren't tanking. And if you're expecting them to come down, I don't know. I don't think the inventory of properties listed for sale, the supply, is going to support a big crash. If you're looking at purchasing a condo in Destin, you're waiting for the prices to crash, I'm not seeing the data support that, at least not right now. If you're looking to sell, there's plenty of data out there that indicate the market's still a little funky. So you should maybe think about selling while you know what's happening. If you sell now in the next, 6 months or so, we have a pretty good idea of where the prices are. So depending on your timeline, you can mitigate a lot of risk if you start selling now. Out a year, 2 years, 3 years, who knows? We might end up in war. We got an election coming. We got a lot of stuff that could impact prices. But if you're a short-time player, sell now. We can help you out with that. Info at smartbeachinvestor.com. This is what we do. 30A condos. This is a little bit different, right? So keep in mind, when we talk about 30A condos, the data set is a lot smaller for 30A condos. There's just not nearly as many of them. And if you go back in the day, right, the Great Recession, all that stuff, affordability collapsed, all right? And we saw the number of sales fall. But it didn't stay down that long because, again, there just wasn't that much from a data set. It stayed down for from 04 to maybe 06. 2-year period seems like a long time, but then it started to climb out, as you can see here. Very cool, right? Ups and downs, a couple bumps there, but generally moving forward. COVID hits, cheap, easy money, right? Comes. People want to come to the beach, get away from these cities, work environment. I can work remote, all that stuff. Condos on 38 climb to the moon, right? And then they come back. Affordability collapse. Rates go from 2% to triple to 6, 7, 8. The prices of properties doubled. So the affordability just disappeared. The cost to own, insurance, HOAs, milestone, right? All that stuff caused our transactions just to, right? Makes sense. Let's talk about 30A listings real quick, right? Look at back in the day, Great Recession, we saw listings fall off. The inventory of supply plummets. Same story, REO, bank-owned properties, nobody wants to compete with that. A lot of folks were upside down on their properties and they couldn't sell without bringing money to the table. That's an issue. So they didn't. They didn't list, they didn't sell. They either held or there was a short sale foreclosure. But the number of listings plummeted as the banks tightened their loan process, the economy got tight, just people were not selling or buying for that matter. So the listings fell, supply fell. Look at now though. Yeah, coming out of COVID, they dropped a little bit, but now what? They're already bouncing back up in terms of listings, number of. Now they're not bounced up to where we had back in 2005 and 6 by any stretch, but they're on the rebound for sure, which tells me that owners of condos on 30A are feeling confident about what they have. They're locked into these mortgage rates that are cheap. Their cost to own has gone up, no doubt, but it's still with these low mortgage rates that are locked in, they're feeling pretty confident in the future. So no, they're not listing. They're going to ride it out. Well, it might be rewarded for that. How about sales prices? What is happening with that then? Here you go. Look at the sales prices. Crazy, huh? Didn't see a massive fall off back in the Great Recession. And again, I think it's because there just wasn't that many. Interesting though, look at the supply back then. It jumped 04 to 09 on 30A, 51 new buildings, 2,524 new units. That's a lot of new units on 30A for condos, right? So you had a lot of inventory come on. And when you get that supply, it drives the prices down along with the short sales and foreclosures. We didn't see that massive steep drop, but it certainly dropped and continued to drop well into 2012, it looks like. A lot of supply, foreclosures, short sales, economy, dicey, folks not buying, sellers, if they're going to sell, have to lower their price. Makes sense. You look now, again, our supply. Number of new buildings in the last 5 years, 10 new buildings. That's not 51, that's 10. And look at the number of units, 373. That sounds like a lot, but it's nowhere near 2,500, right? So the supply is not grown. There's no short sales or foreclosures either, because people have a lot of equity in these properties. They put a lot of money down. There's a lot of cash deals that were out there. The banks are not going to be taking back a lot of these properties. You're not going to see wholesale foreclosures and short sales. Therefore, prices are going up. So if you're looking for a condo on 30A and you're looking for a crash in prices, not seeing it. Not right now anyway. If something changes, we have war, Trump gets elected, I would look for prices to even go up. He's going to light the housing market on fire to get it going again. If you're looking to buy on 30A, your best chance might be now. If you're looking to sell and you want to mitigate your risk, I would list now because you don't know what's going to happen. But the indications are prices are going to be either holding or going up. I don't see any reason for them to drop. Let's talk about Panama City Beach condos and the number of transactions that happened with them over the last 20 years. Back in the Great Recession, bounced around a little bit. I mean, you can see it here, which is interesting. It didn't have that massive peak that we saw in Destin or even 30A had a few more. It was just up and down, kind of like a sawtooth there. But affordability collapsed back then, right? The Fed made it hard to get loans. Banks wouldn't lend. Short sales foreclosures. Not a lot of people had a lot of money. So, yeah, we just saw the transactions. And they bounced around for a while till about, 2013, 2014. Started to climb. Well, it really started climbing 2011. Steady. Then COVID hits. Cheap money. 2% loans, 3% loans. A lot of folks listed because prices jumped so much. They wanted to take advantage of those prices. They could double their return if they sold and they bought it just a year or two earlier. So you saw a lot of inventory come on the market and a lot of transactions people bought. Then the Fed started raising rates and look out, affordability collapses. Cost to own goes to the moon. Sales drop. This is what's happening with listings. Well, let's take a look. How about this? This is a steady Eddie market for Panama City Beach condos. Great Recession, massive run up, right? That's your pre-construction, your new buildings coming on the market, flooding the market with a ton of units, a ton of inventory. And then what happens is the market turns. We're battling short sales, foreclosures. Nobody wants to fight the bank if you don't have to. Wait it out, ride it out. Maybe you're upside down, you can't even sell. Right? There are a lot of people in that case too. You just saw the number of listings just melt away. But then they just kind of stayed there. Slow, steady, Eddie grind. Even with COVID, we saw a number of listings jump up, but not a ton. There's just not very much supply. And having not very much supply is saving the sales prices. We're seeing with the listings here, matter of fact, they're starting to climb up a little bit. Maybe people want to take advantage of a market right now, maybe get some high sales prices before prices soften a little bit. I don't know, hard to say. But there's a strong position for owners right now, so you don't see a ton of people listing. Now, what does that mean for prices? Well, let's take a quick look. Here you go. Back in the day when we had a lot of supply, Great Recession, look at in 04 to 09, 57 new buildings came to Panama City Beach. 8,000 new units. That's a lot of units. That's a lot of new units that weren't there before to Panama City, right? Splash, Tidewater, Calypso, you name it. A lot of units. And that forced the prices down, right? If foreclosures, short sales, again, that'll do it. People scared about the economy, selling cheap, that'll do it. Plus all that supply. And then we just had kind of a steady run for a good while there. COVID hits, all right? Cheap money, easy money, prices jumping fast. A lot of people decide to sell to take that big return. So we saw prices climb, all right? But again, the inventory and supply is nowhere near. One new building in the last 5 years, Panama City Beach, condo-wise, all right? I think that's Calypso 3, 255 some units, okay? Not nearly 8,000, all right? So your supply in Panama City Beach for condos is tight. Now it's up. It's up, no doubt, compared to what it's been a few years ago, but it's still pretty tight in the overall scheme of things. What does it mean? What does it mean? If you're looking to buy Panama City Beach condos, I think now is when you want to get in. Now, maybe the next 12 months is when you really want to get in and get these things. Because I think the market's going to moderate pretty quickly, and you're going to see a turn in that little curve there, and you start to see it go back up as rates come down, as the new election occurs. If Trump gets in there, I would expect prices to start to climb again. Maybe not. I don't know. What do I know? But maybe. Yeah. If you're a buyer, you should buy now. Mitigate your risk. All right. If you're a seller and you can hold, I think I would hold if I was a seller and I could hold. If you can't hold, if you want to get out, if you're worried about risk and things changing, you should sell. Sell now when you can see the future pretty clearly. You can see 1 month out. You can see even 6 months out pretty clear. After that, it gets hard. It gets hard. All right. We know over time prices go up, but we also know in time they drop, and there's all kinds of stuff that goes on. Okay, what's it all mean? What does it mean if you're a seller? Well, like we've been talking about, if you're a long-term seller, owner, you got time, 5 years to 10 years, longer the better. Sit back and watch. Markets go up, markets come down, markets go up, markets come down. They cycle, right? We're in a tight cycle right now with regard to transactions, but it's not cycling down very much on price, mostly on transactions. So ride it out, see what happens. You might become a buyer if prices drop, or you may decide if prices keep going up that you're a seller and you want to take your profits and run. It's never a bad time to take a profit, right? If you're a short timer, this is when you want to be careful, because markets, they bounce. You can get caught. If you need to sell quickly, if you want to get out, you should sell now, because we can see what's going on. We can make a good estimate and get you what you want. 3 months, 6 months, we got you. 6 months longer, a year, longer than a year, gets really, really murky, okay? Take the sure thing, mitigate your risk if you have to sell. List now, get the highest price you can, okay? If you're a buyer, long-term, buy and holder, smart. If you're a buyer and the numbers work, go ahead and buy, right? If you're getting a mortgage and the numbers still work, go ahead and buy. Likelihood is the rates will come down, you can refi into an even better deal, so that'll work for you, okay? And then if you're a holder, the market's gonna go up over time. Not all the time, but over time. So you'll be fine, okay? To learn more about any of this, send me an email, info@smartbeachinvestor.com. We'll get back to you, we'll help you out, make sure everything's good. Our job is to max out your position as an owner, buyer, or seller. Simple as that. So we're gonna work hard to do that for you, all right? There you go. That's what's going on. We'll see you soon.